Robert Kavcic joins me now. He's a senior economist with the Bank of Montreal. Robert, good to see you. And I want to kind of get your sense here on when we're looking at that overall outlook of the economy. As we're keeping a close eye, I believe July 13th is when the bank is going to be giving us its push in terms of where those numbers are going to be.
Sure. Well, the economy is, in short here, is just holding up very well. It's been very resilient through the first part of the year. And I mean, look at all the stuff we've been dealing with, right? A generationally abrupt increase in interest rates. We've seen wildfires. We've seen bank stress south of the border in the US. And we have not had a single month of negative GDP growth in the Canadian economy this year. So that's a pretty resilient run.
Mm-hmm.
Bank of Canada is looking at this and saying, you know what, is policy actually tight enough? Maybe not. And that's one of the reasons they came off the sidelines and raised rates at their last meeting. And we suspect they might do the same again in July.
What do you then anticipate? Because consumers are looking at this going, especially anyone looking to buy a home, or we're talking about mortgage rates, et cetera. How do you define that for them in terms of what that's going to mean for them?
Well, there's a lot going on for consumers
Yeah.
in the household. The good news is that the labor market is exceptionally strong and wage growth is still solid and steady. So from that perspective, the household and the consumer is in very good shape. Problem is they're paying a lot more to buy the same amount of stuff, right?
Right.
So inflation is still strong. It's come down from the highs we saw last summer, but it's still running at a pretty strong clip. And then the affordability problems in the housing market are especially acute as well. So it hasn't been, the strength we're seeing in wages and the job market hasn't been enough to offset that, especially when you throw in now 5 or 6% mortgage rates. So it's a little bit on both sides of the equation for the consumer right now.
Right. And what about for businesses as well, who, of course, are sort of trying to continue? And I think a lot of businesses are still trying to recover from the pandemic, get things going and boosting. But there is that fine balance as we, of course, we have to bring the consumer element into this to ensure that, business is happening and people are buying and business is selling. But again, sort of steering away and looking at what the bank is doing, that certainly drives the direction of things.
Sure. And for the most part, the business sector is in good shape. It depends a little bit where you are in the economy. So the goods side of the economy has cooled off quite a bit. So those businesses physically selling goods to consumer have seen activity pull back because consumers are just simply not buying as much physical stuff as they were early in the pandemic, right? Remember when we were out there renovating backyards and buying spin bikes and stuff like that.
Right.
The flip side is that on the service side of the economy, Canadians are out traveling. They're out going to bars and restaurants and sporting events again. So the service side is very strong. That comes with its own challenges because the service side of the economy is very labor intensive.
Yeah.
And we're very starved for the appropriate workers to fill a lot of these positions. And at the end of the day, what does that do? It drives up wages and it keeps inflation persistently high. So those are some of the challenges the Bank of Canada are fighting with right now.
And the Bank of Canada wanting that inflation rate to get down to 2%. That's what its initial goal was, right? 3.4%. So would you anticipate then the bank is going to continue even after this rate hike in July? Perhaps we might be seeing another one?
Well, July is going to be a pretty close call for them because they are seeing pretty clear evidence that things are moving in the right direction, right?
Okay.
Inflation is coming down, wage growth is coming down, economic activity is cooling off, but the level of a lot of these things are still a lot higher than where the Bank of Canada wants to see it, right? So, yeah, great, we have 4% inflation. That's half of what it was a year ago, but the bank wants 2%. And that's in economics terms, that's still a long way above where we need to be. So I suspect they will raise rates again in July, but there's also pretty clear evidence that a lot of the interest rate increases that we've already pushed through the system are in fact working. So they are at some point going to, again, just kind of sit back and see how much impact those past rate hikes have, because it does take some time for that to really filter through the economy.
So then, Robert, before I let you go, if you look through that economic crystal ball, if you will, what do you anticipate over the next few months in terms of us getting to where the bank wants Canadians to be, where it wants the economy to be?
Well, I think we're going to get there. I think so. We'll probably see a little bit more upward push on interest rates. We probably are going to see inflation continue to come down. There's pretty good evidence that that's already happening. It's just a matter of time before we get to where we need to be. Early stages of 2024, I would say we're probably going to be in pretty good shape on the inflation front. The big question, I would say, is going to be what the impact of this is on the economy and the job market. And at this point, it's really hard to get away from the fact that we've seen more than 400 basis points of tightening compressed in a very short period of time. And the economy historically is always going to stumble on that at least a little bit. I think at this point there's enough buffer out there to suggest that the impact is going to be pretty shallow, but later this year we could see a little bit of a hiccup in things like growth in the job market.
All eyes on those numbers in the next couple of weeks. Robert, it's great to have you to get that analysis. Robert Kavcic is the senior economist at the Bank of Montreal. Thanks again, Robert.